Hello everyone, good morning and welcome to today's morning report with me, Richard Perry, market analyst at Handtech Markets for Thursday the 16th of October. And what an incredible trading day we had yesterday. Huge volatility throughout the day across basically all asset classes, bonds, Forex, equities, all having a huge swing on the day and some incredible moves. Wall Street closed the day basically only slightly lower, in fact, about 0.8% down. I say slightly, it on the S&P 500 it had been as much as 3% down at one stage, so actually played a fairly decent rebound in the end. The volatility obviously continues to rise on the S&P 500, and there shows no real let up yet, although you had a spike high on the VIX up towards 31. It actually settled back down at 26, so incredible move there on the VIX index on the day. 15% higher on the day though, still going up on that VIX index volatility. So these moves continue. In terms of currencies as well, we've had a bit of a look at that volatility on the day on the dollar index. Huge move higher and then lower, and it certainly continues to remain volatile on the dollar. Big sharp correction on the dollar, which impacted across the board on the Forex pairs and also gold as well, and a little bit to a certain extent on oil. But certainly these Forex pairs, which I will talk about in a minute, have been incredibly impacted by this dollar move, and they continue to be today because you're getting an unwinding of that move to a certain extent with this dollar index slightly higher on the day. So what we're seeing is throughout the day, we've got a huge amount of data actually due. I'll go through it quite quickly as far as I can. Starting at 10 o'clock, we've got the final reading of Eurozone inflation, HICP, at 10 o'clock, due to come in around about the 0.3%, which was what the flash number was. That's not going to help the outlook for the market, which continues to be concerned about the Eurozone slowdown and possible move to deflation. So that's wouldn't help that if it moves to 0.3. Then we move into the afternoon and we're looking at US jobless claims, expected to remain slightly below 300,000 at 290,000 is the expectation there, so no major move expected. And then we're looking at we've got the industrial production number, expected to come slightly above last month at 0.4%, so slight rebound in the industrial production. But we're also looking at the capacity utilization portion of that data. That's expected to slightly improve again to 79.0 from 78.0. So that suggests the economy is being utilised in a more efficient manner, and certainly that would be beneficial for the US. Then we're looking at the National Association of Home Buyers House Market Index, and that is expected to remain flat at 59.0 for the States, but any improvement on that would certainly help to support, I reckon, these markets this afternoon. And then throughout the afternoon you've also got three Fed speakers, three FOMC members speaking through the afternoon. You've got Plosser, Lockhart and Kochler-Kota all speaking. Basically, Plosser and Lockhart are on the hawkish side, and Kochler-Kota is a dove, but only Dennis Lockhart is the only voting member of the FOMC. So it's important to realise that there is a general theme of hawkishness that's coming out of some of these Fed members, but you may well see that being just controlled a little bit today in light of the volatility on these markets. It'll be interesting to see what they come out with. Anyway, that takes me to my chart of the day, which is the Kiwi dollar. And the Kiwi has rebounded over the past couple of weeks, really, since hitting that low 77 big figure pretty much, which was the which was the critical support back from June 2013, August 2013. It hit that and found support, but it's just rebounded back to this downtrend, which remains intact. And it's just that downtrend today comes in pretty much bang on 8 0.8 big figure, and it's just falling away from that at the moment. And on the intraday chart, you'll see that there is a move in process back towards this sort of neckline of this base pattern. It's not really a neckline anymore, because it's just an ongoing sort of consolidation pattern. But certainly yesterday's spike higher helped it, but today we're seeing a bit more dollar strength back into it. But that 79.25 is certainly a basis of support now, because it was resistance, became a bit of basis of support here, and then resistance again, and the burst through should now turn into support again. And what we've seen in the last hour or so is that a spike lower has just formed support just above it. So interesting that should be seen. Now the key support comes in around about that 78 figure, which was the lows of the 10th and 13th, and also yesterday as well. So 78 big figure is around about where we need to be thinking about the key support level on this Kiwi dollar. But the longer term chart seems to suggest there is a bit of a consolidation and drift higher, but it'll be interesting to see what happens at this big downtrend. Certainly these momentum indicators on the daily chart continue to unwind, so there is a little element of a rebound going on at the moment. But as I said, we're now coming up to this first key test of the outlook, which is this big downtrend, and we'll see how that goes. Initial signs are that it's being rejected. Anyway, I wish you good luck in your trading on Kiwi dollar today, and I will speak to you later. Thank you.